Test, 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 test. Okay, this is all live. Good. Hi all, and welcome to another edition of Midday Market Review. Live trading, key trading levels and trading setups for popular markets. My name is Phil. I'll be your presenter today. Welcome to TraderCast live trading channel. Okay, now let me just quickly check that we are up and running as well, and I will yep, that's okay. Brilliant. We are up midday market review. Excellent, excellent, excellent. A fairly volatile day ahead of us. Fairly volatile day ahead of us. We just got US inflation reading, which triggered this market sell-off. But I'll talk about it in a minute or two. So I'll say hi to a few people as they come along, and if I see you in the community. So hi Mike, hi Darren, Robert, Rose, a few other people who are watching us. Welcome, welcome, welcome. Okay. For those of you who are watching this for the first time, my name is Phil. I'll be your presenter. If you're looking for a community, check us out on TraderCast.com. If you're looking for the education, if you're a little bit confused with what I'm saying here and you need a little bit more help with your trading education, check out My Trading Skills. Some of our courses are completely free. Check them out and see if you like them. Now, over the past 10 years, I had the privilege of speaking in front of various different industry events, and I managed to teach many people how to trade. Some of them were brand new and some of them were experienced and needed the help with a specific area of their trading activity. This brings me to a disclaimer, because I'll be talking about live trades. I'll be showing you some live trades. This is not the advice. This is basically a practical application of what I think a beginner trader should be able to do. And this is what we are teaching in the courses. So I'm just showing you how to apply in real time what the courses cover. So basically that's all it is, my experience and opinions only. Now, since we are talking about live trades, I have a couple of open. Yesterday, for those of you who watched yesterday's broadcast, I was long Dow from 32,550. I closed half of that position at 32,567, and then also 32,565. It was a scalp. So I had a few other positions afterwards, but it wasn't broadcasted, so I don't want to talk about all of that at the moment. Now, what I have open is I have a swing position open in gold at 1844. Over the past several trading sessions, we talked about gold on a number of occasions, and that level was very important. This is also posted in the community as well, with the full analysis and key trading levels. So that's all posted. So I'm long gold from 1844. I'm also long WTI crude from 98.88, and I am long Dow right now. So long Dow at 31,977. So thereabout. It's actually
comment from the Irish Prime Minister says we do believe there is a pathway to resolving the protocol.
So that's where I'm at the moment. A very this is a kind of a shorter term intraday position with very tight stop. My stop is just around 50-60 points below. So I'll tell you all about it in a minute. But I'm long Dow. Literally, I went up and before I clicked this a broadcast button to go live, I've clicked on this. It met my criteria and I'm in this trade right now. Okay, so what I'm going to do now is I'm going to show you I'm going to show you a couple of these trades that are open, and then we can go and cover a few other markets as we go along. So the first one is obviously the last one that I got in, which is Dow. And the trigger for the Dow is actually a reaction to US CPI data. For those of you who watch the markets, who are a little bit more experienced, you know that earlier on we received economic data release, which is telling us what the current level of inflation is in US. So this is the 15-minute chart. Let me just show you how this looks here in a 1 minute. So we saw an initial knee-jerk reaction, a second wave, third wave. So 1, 2, 3 waves. The third wave is actually the smallest in intensity. It's coming to a major daily support and so on. So I've decided to go and take a nimble on this trade. So this is currently in the profit, and my stop loss is down here at the low. So since markets are quite volatile, I'll be taking partial profits as we go along. But what I'm going to do right now is I'm going to move my stop closer to about 28 points below where I entered. So I'm still carrying some amount of risk, but I want to take it closer to where I entered. And ideally, if I don't take the partial profits up here towards 32,140, maybe even higher, I'll be moving my stop above that area. Now, so that's where I am with the Dow. This is up and running right now. This is up and running right now. This was based on the analysis here. So this is the analysis for the same market. This is a daily price. There is a huge downtrend. Earlier on today, we had oversold bounce back. The European markets, Asian markets, triggered by Chinese data, were bullish, and then European markets appear to be quite bullish, and then the US futures were bullish as well. So the market was basically rallying, and then it's basically this what it was. This was the overnight and then European session. Rally, rally, rally. And then this big candle here is the inflation, the CPI reading, which came in down to a previous low. So this here is the previous low. So significant level. So the first touch of that level normally represents a little bit of a bounce back. Why? Because if anybody was jumping short on this trade, this is where they're looking to take profit. When they're closing their short trade, they need to buy in order to close the short sell. So that creates a bit of a bounce back, at least the oversold bounce back, and that's the reason why I've decided to get in on this trade. Nothing more. It's very simple price action, and I'll be paying attention to this trade very carefully. If I see
a report here from the Financial Times, they say the European Union would need to spend around 200 billion euros over the next 5 years in their bids for energy independence from Russia. That's according to the draft plan set out in aggressive targets, including areas.
If I see a big reversal, I'll get out of this trade
and lowering
very
consumption.
Quickly.
The draft is of the upcoming Repower EU proposals from the European Commission that have been seen by the FT.
Okay. The other thing that we are talking about. Hey Hamid, lovely to see you again. So the other position that I have open, I have WTI crude long, and I also have gold long. So let's talk about gold very quickly before we move on to anything else. So here we go. So this is the gold trade. If you remember, yesterday and the day before yesterday, we were talking about gold key trading level 1844. Keep an eye on it. So the price did come to 1844, and then it bounced. It looked like it could go higher. I still think it could possibly go higher, but I got filled at 1844, and I have my stop loss just below the wick of this candle here. My stop is at 1830 even, 1830, yes, 1830 even. That's where my stop is for gold trade. The way I'm seeing this as a potentially a fairly significant oversold falling wedge. They have the tendency to break to the upside. Now there is a cluster of these lows here, so even if the price does go and break through 1866, it's likely that it might meet some additional resistance at the cluster of these highs at 19 and then 1909 on the upside, 1916 on the upside. But so far this looks like an oversold bounce back, and it looked quite positive. It looked quite positive. Now where we are with this trade is that it's bouncing slowly, and I'm looking for a little bit more to the upside. Otherwise, if the price reaches 1830, I'll be stopped out, and I'll get out of this trade with a $10 in price loss. $10 in price loss. So let me just show you that trade as well. Are you looking at anything yourselves, guys? Is there anything that's of interest? Is there anything that's that particularly breaking out or maybe setting up for you? So yet again, this is a short-term intraday 1-minute chart. So let me show you the entry 1844 entry. The stop is down here at 1830. You might see it better if I change the time frame. So there is a stop at 1830. This is the entry here, 1844. This here is the reaction that we saw in other markets to US CPI. So basically what that is market participants, analysts were expecting that this time around the US inflation reading will show a weaker number, i.e. around 8% or thereabout, and basically what happened is the number came out at 8.3 for US core CPI for year on year, and month on month came in at 6.2, and the expectations were for 6% on monthly and 8.1 on annual basis. But the previous number that came out was showing that US inflation is at 8.5. So that's basically triggering Federal Reserve reaction. They're hiking rates in order to cool down the overheating economy and rampant increases in prices. And the only way they can do that, or the easiest way for them to do that, is by hiking rates. So if they hike rates, that means that people with the borrowing will have higher repayments of their loans and less disposable income. Therefore, they'll be able to buy more goods. They won't be able to have as much disposable income, and they won't be rushing to buy more goods or pay for the services if they have to spend more money on servicing their loans and that kind of stuff. So that's the basic premise of it. And the analysts were expecting that the number will come out showing the greater dip than it did, and this is the knee-jerk reaction. So dip down to kind of flush lower, but I still think this is a good trade. I'm in this trade at the moment. My stop is at the right level. This is a swing type trade, and I'm gonna keep the stop loss where it is, and just monitor this and show you if I change my mind or if I readjust anything going forward. Probably the best trade I have today or since yesterday is on crude oil, and let me just show you the analysis of that. And this is also posted in the community. Crude oil, we had that consolidation here, daily consolidation. There is a support trend line which I can extend even to this side. So low, another low, another low, another low, another low. It's coming down to that level. This is the previous low here as well. So significant level of support at this shaded area around 99.15, 98, 97.60 area to the downside. Initially, if you remember, I was long crude oil as well at 106 with my stop at 104. That was based on this setup here. But that played out against me, and I'm stopped out of that trade. Now I'm long in again, and I'm looking for potential breakout from this area and then continuation into this zone up here towards 110. So that's a basic premise for this trade. Really happy with this trade. I'll show you how I'm managing it at the moment. And I'm not taking any partial profits out of this trade just yet, but that's where I am. So this is crude oil. Your broker might be showing you a slightly different price. You know, just check, are you trading futures, which contract you trade, and so on. But basically I got filled down here at 98.90 or thereabout. Actually, what is it? I'll tell you exactly where I got filled. 98.88, so that's where I got filled. So I got filled down here. My stop loss was below these kind of lows down here, and then I moved it closer. So my stop is now above the entry. So my stop is above the entry, and this trade is in the profit. This trade is in the money. So I'm locking in some of that unrealized gains by moving my stop loss higher. And all I'm doing at the moment is I'm letting it run. This is a swing type trade. There is a possibility of consolidation around, see, these lows here from 3rd of May, and then also these highs here from yesterday, from 10th of May. But if the price does manage to break through and closes above there, it is possible that it could rally towards 106 again. If you remember, I got in long at 106 a couple of days ago and I got stopped out, which was that there's a big trend line going here. So this was a loss of trend line. This would be a retest of that previous support, now newly found resistance. So that could be another area of interest for partial profit taking. And my take profit level at the moment is up here towards 108.80, which is a cluster of these highs, and then 110 subsequently to the upside. So anywhere around here, so 106, 108, 108.80 would be a good area for a partial profit taking. But I'll keep you informed about what I'm doing at the moment. Really happy with it. I'm not taking any profit. I'm letting it run. This is a swing trade. I'm really happy with that setup there. Okay, now gold is bouncing a bit as well. So let me just see if I can move that. Here we go. This is gold. This is Dow Jones. This trade is in the money as well. And then we have oil as well. So that's all good. All very good. So let me show you what I'm going to do with my Dow Jones trade. Dow Jones is coming to a point where I should be looking to see this low here. That's an area where I should be looking to take partial profit. So I'm going to do is I'm going to close. I think I'm positive about this trade. What I'm going to do is I'm going to close 1/3 of my trade around here. So I'm going to close 1/3 of my trade here and take some money off the table. And then what I'm going to do is I'm going to move my stop above my entry and lock in another 60 points, because that's the cluster of the lows. So I wouldn't be surprised to see a little bit of consolidation here. If this consolidation doesn't happen, then we'll see a breakout and a move higher towards 32,230 and higher and higher. This is only a 1 minute chart that you're looking at here. It looks different on the 15-minute. So there is your 15-minute candle. Sorry, I'll do it now. 15-minute candle, and this is another 15-minute candle. There is a cluster of the lows. Breakout above here could potentially move higher in a direction of this breakout and a risk-on sentiment that was happening early on today. But I'm happy with this trade. I'm keeping it running for now, although it's only 2/3 of my initial trade. It was only 2/3 of my initial trade. Now, let me just see if there are any questions or any questions, guys? Any requests? Anything? Do you want to say anything? Do you want to say hi? Now, where am I now? So, what do we need to know today ahead of US Open, which is in about 9 minutes time? We're going to have US markets open. US CPI inflation came in higher than expected. DXY or Dixie or US dollar index strengthened. Initially gold, S&P 500, Nasdaq and WTI futures weakened, and now we are seeing a reversal. Something that's interesting for those of you who are Ian, I think it's Ian. I'm not really sure. Ian. I'm not really sure if I'm pronouncing this correctly, but that's I've covered all of that already at the beginning of the broadcast, because that's when the trade was triggered, and then also right now. Now, so for those of you who trade euro dollar, there is something of interest as well, because European Central Bank President Christine Lagarde, our inflation forecasts are increasingly pointing towards inflation being on target over the medium term. I can show you. Are you watching live? Here we go. I'll do the Dow for you again. So Ian, he's saying that he didn't see the Dow. So here we go. So this is Dow Jones. What's happening here is Dow is downtrending quite severely, and it's coming to a major daily low. What happened earlier today, overnight, is this. This was a risk on yesterday afternoon, sell off into the close. Overnight, sideways. Now, what happened is Chinese data came in quite nicely, and that triggered Asian markets rallying, and then that was spilled over into European markets this morning, and that also dragged US futures higher this morning. I don't know where you're based. Ed Raj. And basically what happened is the US inflation reading came in and triggered this big sell-off, and I bought this low. So that's the basic premise. Okay, so that's the basic premise. And I think that market overreacted to the downside to the number. So let me just show you. Hey, hi Hamid, hi. So what I'll do is I'll show you Dow again. So this is Dow. Sorry, apologies. What am I doing with these charts? Here we go. So this is the Dow, and what I did is I decided to go long here. My stop was below. I moved the stop loss closer. I moved the stop loss at break even. Sorry, I didn't move the stop loss closer. Then what I did is I took partial profits. I closed 1/3 of my trade, and then I moved the stop loss above the entry. And that's where I am. So I'm locking in a little bit more money by moving the stop loss higher. So I'm locking in another 80 points on this trade, and I'm letting it run. There is a possibility of another consolidation around 32,200. Breakout above that. We
Just to remind you, we're about 3 minutes away
now.
now
That's the basic
bottom
premise.
of the hour, so with the US cash equity open for the day.
Hamid, yes. Hamid, I'll cover silver for you, yes, but it's posted. I've posted it for you already in the community. You asked for the analysis. The chart is here with the key trading levels, point of control, support and resistance, and also other key trading levels. So that's all posted for you. That's all posted for you. So that's where I am with the Dow Jones. So I'm currently long Dow at the moment. Okay. Raj, yet again, I keep repeating the same things now because some other people watch this from the start, and I'm also long gold from 1844. No surprise to you, Raj. That's the level that I was looking at. My stop is at 1830. I didn't move the stop yet. This is about $14 in price of risk, but I'm keeping it running. So I'm long gold, and I'm also long WTI crude, which is a really good trade. I'm really happy with that. I did the analysis for all of this already. I know you guys are jumping in late and so on. So I'm long WTI crude. I didn't take any profits on this trade. All I did is I moved the stop loss higher to lock in some profits, and I'm keeping it running. I'm keeping it running. That's all. So these are my 3 trades at the moment. These are my 3 trades at the moment. Hamid is saying I need a little explanation. Okay, well, let's do this. Let's do silver for Hamid, and then we can go and check out a few other things. So Hamid is saying, can we go and check out silver? So let me just open that chart for you straight away. I'm gonna put a very basic template here. Price. Price with no grid. Okay, apologies for messy charts, but here we go. So Hamid, this is silver. Look, it's a naked chart. There is absolutely nothing on it. There's no indicators, no moving averages, no trend lines, absolutely nothing. So silver appears to be consolidating sideways in the same way as gold. Okay, so what's happening is, because of this inflation data came in, and came in slightly higher than what market participants anticipated. Last month we got inflation in US showing 8.5%, and that triggered Federal Reserve's decision to hike interest rates. Now, because they're doing so, that's causing US dollar to strengthen. So all the other markets, i.e. commodities in particular, any other instruments which are traded in US dollars are impacted. Volatility increases. If the currency that something is traded in strengthens, the price of that thing normally dips. So that's the basic premise. And dollar is strengthening because Federal Reserve is hiking rates. So that's a basic premise. So that's why we saw a pullback in gold and pullback now in silver as well. So also, so what's happening here is, if I can analyze this for you very quickly, I would take the cluster of these lows down here as a major level of interest. Below that we have also this wick here So this is also a low. So 21 or 21.50, major levels of interest. Yet again, this is posted in the community. This is already posted in the community. So let me just show you if I can. I can't peel it off, but it's already there. Okay, you have access to the community, you have access to the chart, you have access to the whole full written analysis and the key trading levels. So this normally indicates a sideways consolidation. This type of patterns, they have the tendency to break to the upside. They have the tendency to do something like this. So this is your falling
looking to
trend
initial
line.
open here for the S&P 500, opening down 0.1%, with the Nasdaq 100 as well, declining 0.5%.
And then we have resistance on the upside at the cluster of these lows. And then also cluster of these lows here. So that's your resistance here. So basically what disciplined traders are looking to do, they are seeing this as a bullish continuation pattern. They have the tendency to do something like this. They have the tendency to rally and then break, possibly retest, and then what they tend to do, they tend to extend their rally to the upside. That's how it normally works. Now this is a much longer term time frame. So if I saw this type of setup in shorter term intraday price action, I would likely be looking for a potentially bullish breakout. Okay, now this is the weekly time frame. Sideways consolidation, high, lower high, lower high, lower high, lower high, low, slightly lower low, slightly lower low, slightly lower low, but support is holding, support is holding, support is holding, support is holding. At some point something will happen. So bullish traders are looking for a rally from here and a breakout towards the resistance for either another leg lower or a breakout, the one that we talked about, and then a push higher. So that's what bullish traders are looking to do. Bearish traders are looking to see if the daily candle closes below this area here. And let me just put the color. I'll put a color in for you so there is no confusion. So a daily close I'll do this. So that's your resistance. Okay, and this is your support. So the daily close below this area down here would likely trigger additional sell-off, further sell-off. So this is a major support. And what do I mean by daily close? A full candle closing below the wicks of these candles, below this, a full red candle closing below. It's likely going to trigger a further selling pressure, and then this turns more bearish, and then this is your support, loss of support, and then retest. And guess what? It's retested as a newly found resistance and the price goes lower. So that's the basic premise of the price action. That's a basic premise of support and resistance. Okay, this is all covered in my trading skills trading courses. There is a course covering support and resistance. It's completely free. Sign up for the site, mytradingskills.com. Go and check it out. It explains exactly what I'm telling you now. So it's all there. It's all there. So what would I do with silver? Well, in the same way as gold, I'm potentially looking for an oversold bounce back. I'm looking for the price to do something like this. But if I don't have open position on this, the criteria is not met. I did not get the confirmation that the price is still breaking out. Look, selling pressure, selling pressure, selling pressure, selling pressure, selling pressure, and this is a first green candle which is not completed yet. So this candle needs to complete as a bullish engulfing candle, morning star reversal, a hammer, something that's bullish, something that looks like this, something that looks like this in here perhaps. Okay, then potentially we could see a continuation to the upside and an extension towards 23.80.24. So that's the basic premise. And if I decide to get into that position, my stop loss would be just below these lows, just below 21. So whatever I enter, my stop should be around 21. And that determines the position size, because that determines the distance from the entry level to the stop loss. So that's the basic premise. Okay. So okay. So do you mind me? Why are you looking? Why are you looking at silver? Why is that of interest to you? Is there a particular reason why you're looking at silver market? Are you basing it on the fundamentals maybe, or?
Geopolitical news and getting reports that the Russian deputy foreign minister did meet with the US ambassador.
I'm stopped out, guys, on my Dow. I'm stopped out on my Dow, so my position is closed. Okay, so Dow was open at 31,977. The first third was closed at 32,157, and then 2/3 closed at 32,056, and that's thank you to me for talking about silver instead of looking at my position. Never mind. So here we go. So so this was Dow. So I closed 1/3 at.
Just getting a bit more info here between the meeting of the deputy foreign minister from Russia and the US ambassador. They did discuss bilateral issues.
Stop loss. This will be confusing for some. Just I'll say closed. And 2/3 at 32.56. I'll say stop loss. Stop loss. Okay, so that's both positions are profitable, but yeah, I should have managed my position better instead of talking about silver. That's where I am. So that position is closed now. It's gone. I'll pay attention to it and see if I can get in again. I'm still long crude, you beauty. Yes, and I'm still long gold. So nothing on nothing on Dow Jones. So Dow Jones, I'm stopped out now because my stop was moved above the entry. I also have gold. So gold is showing in the money at the moment. I'm not moving my stop. My stop is still below. This is where my stop is. Not moving that. And I'm also long crude and really loving that trade. That was a good one, a really good one, and happy with that. So there is my crude trade. I'm in the money here. All I'm going to do is I'm going to move my stop loss above here to lock in some more profits. The price is breaking above this high. Price is breaking above this consolidation, and if this candle closes where it is, I'm feeling a little bit more comfortable that the price could possibly do something like this: pull back, maybe retest, and then carry on towards 106, which is a nice support here. Support. So I could be looking to close at 106 partially, and then 108, 108.80 or somewhere else. But I'm really happy with this trade. Okay, really happy with this trade. So if I go and change it into a 15-minute, yeah, this is looking good. I'm leaving it running for now, but I will very quickly react to this. Okay. Um, sometimes markets move, sometimes markets move, and that's it. So that's where I am, guys. That's where I am with this trade. I've just realized the time. It's always 2 o'clock, Raj. Oh, gold is breaking out higher. Look, 1855. Lovely. Really, really good. Dow, see? Look at this. I got picked up and off it goes. Okay, I'll get in again. Crude oil is doing really, really well. Here we go. Crude oil is doing really, really well. What's going to happen probably in the afternoon is that market participants will realize that, oh, inflation at 8.3% is not really that bad because it's lower than last month. It's not as low as we anticipated, but it's lower than last month, and that's possibly pointing to a downward trend. And let's buy the market. So that's the idea. Anyway, guys, I've just realized the time. Unless you want me to cover anything else, I'll be finishing soon. Very quickly, I'm going to talk to you about euro dollar here as well, because we didn't do any important stuff. We didn't talk about the news, economic data. We didn't talk about anything else. Where am I now? Yeah, so euro dollar is coiling here. Energy is building up. This type of patterns, they normally tend to break to the downside. Euro dollar is in a clearly defined downtrend. High, lower high, lower high, lower high. However, European Central Bank is possibly hinting that they might be starting with the rate hikes as well. And by doing so, that might trigger a counter trend breakout to the upside. So keep an eye, if you're trading euro dollar, keep an eye on this zone here, 106.10. If we see a push above that level, an end of day close, that could possibly trigger something like this. We could see a breakout and then a retest for another leg higher, a counter trend short squeeze to the upside. Alternatively, if we see a loss of these lows down here at 105, 104.95, all bets are off. The price can dip lower very quickly towards another level of support, all the way down towards 103.50. So it's a fairly significant level of support for euro dollar. Now, the last thing that I want to talk to you about is we have dollar Japanese yen, because Rose was talking about dollar yen yesterday. I don't know if you're still in the same trade, Rose. I can see you're watching, but dollar yen is uptrending quite nicely. This is a clear indication of US dollar strength. Higher lows, higher highs, clearly defined trend, sideways consolidation here. Some of you who are looking at this saying, why did you draw a trend line like this? Look, there is a candle here and so on. Because if you go into a higher time frame, this is the wick, and this is the closing level of the daily candle. So that's a trend line. Major level of support is at 129.80. Support at that level and the rally from that level, and a breakout above these highs at 130.50 could open the way for the extension towards 131, possibly even higher. Alternatively, if we see a loss of 129.50, a daily close below here, then potentially the price could consolidate a little bit more, targeting these lows down here towards 128.40. So that's with dollar Japanese yen at the moment. We're just keeping it running as it is. Just realized the time. I've been broadcasting for quite some time now. So for those of you who have access to the community, I can post some stuff for you if you want it. For those of you who are looking for the education, check out My Trading Skills again. You can find loads of courses there. If you're looking for a community, check out TraderCast. It was lovely, lovely, lovely talking to you all. Stay safe. Be back tomorrow at 2 o'clock. Thanks. Bye for now. Welcome, Rose. Welcome, welcome, welcome. Hamid, thank you. Mr. O'Connor, welcome back. Claire and Enrique, welcome back, guys. Thank you. Stay safe. Bye for now.